Good day, ladies and gentlemen. Welcome to my channel. Today is May 14th, 2022, and I'm going to cover gold, silver, and senior gold miners GDX. The passing week was tough not only for precious metals, but also for the global markets in general. Last week, I suggested that metals were likely due for a rebound towards mid-May before they bottom by the end of the month. Nevertheless, gold and silver decided to get to the bottom of the story without further delays. So let's have a look at the daily gold chart. The metal continued to decline 4 weeks in a row, causing a lot of pain and financial losses. More importantly, gold broke down a 3.5-year major rising trend line and remained below on a weekly basis. In general, it's not a good sign. However, major reversals also happen after trend breakdowns. Gold declining 4 weeks in a row already was bad enough to drive out significant percentage of investors out of the market. Trend breakdowns are engineered to scare last bits of investors who managed to survive this far. Note that gold bounced from this trend line 4 times since 2021, but this time gold sliced through the support, leaving little or no hope for those who were barely hanging on to their positions. Let's examine previous trend breakdowns that turned out to be false ones and fooled those who capitulated in the last moment before a major rally. The most recent example is March 2020 flash crash, when gold collapsed 15% in a matter of 2 weeks, breaking down key trend line. However, note how gold reversed next week and produced over $600 advance within 5 months. Another example dates back 2005-2008 years. This is a weekly chart. Note the similarity between these trends, both having similar steepness and duration. Let's zoom in. After a 2-year rally, gold entered into a year-long consolidation, and just before it was about to produce over $1,200 rally, it broke down the major rising trend line, stayed there for a few weeks, and then reversed sharply higher. Over the next 2 years, gold almost tripled in price. Imagine what felt investors who sold into a breakdown, but shortly after realized that price was never meant to decline. It is particularly painful to sell into the bottom. Let's go back to the recent price action in gold. Note how gold held at the retest of the 18-month resistance, which acted as a support. If this retest holds, then it was as far as gold could go without damaging the structure of charts. Another positive sign was dynamics in the futures contracts on the COMEX. As gold continued to decline, the open interest continued to rise. Over the passing week, the total number of active contracts increased by 20,000, reaching 573,000, which is a rare occasion on a sharply declining gold. Finally, as gold lost 0.6% yesterday, senior gold miners GDX added 2.3% on a day. Furthermore, note how GDX held at retest of the upper band of the falling wedge formation. Even though gold went a little further of my $1,835 target, touching $1,799 and corrected in a more severe form, I largely expected one more decline in May. Overall, I believe gold either bottomed or very close to put a bottom. Briefly, let's have a look at silver. As expected, silver broke down a 2-year support and remained below on a weekly basis. We can witness similar price action back in March 2020, when the metal broke down important support, collapsed in price, and then tripled over the next 5 months. If silver is about to repeat the same price pattern, then we should witness a spectacular run over the next 6 to 12 months. Silver might have put the bottom as gold to silver ratio also hit an 11-year resistance and stalled. If ratio starts to collapse, as it usually do after a major top, we shall witness a sharp and steep advance in silver. Gold and silver are at important juncture, and I believe those who manage to hold on will benefit greatly over the years to come. Stay well and enjoy the weekend. Please note that this video is not an investment advice and prepared solely for educational purposes.